I want to get more now on the Eurozone's challenges from one of the world's most accurate currency forecasters. As the head of market analysis at Schneider Foreign Exchange, Stephen Gallo provides insight into clients who exchange about $5 billion with the company each year. And he joins me now. Stephen, good to see you. Thanks very much for coming in. And when we look at what's been happening in the markets, you know, over the past day, over the past 24 hours in the US, in Asia, now in Europe, you're saying that it's less about Greece, more about concern about global economic data, about the recovery slowing momentum.
I think to a degree it is about, people being concerned that the recovery is slowing. But the point that I made in the note this morning that I put out is that a lot of the weak economic data, so from China to the Western world, and also in combination with that, the sort of disruptive moves that we've been seeing in financial markets is more to do with the unwinding of global imbalances than just simply a slow recovery, although a slow recovery has something to do with it, obviously. And
is that a good thing?
Well, we have to deal with it. And the thing is, Maryam, quantitative easing and all these other factors which have been pushing up asset prices and taking our mind off the fundamentals and keeping them on asset prices have just been prolonging, the inevitable correction that we need to come away from this imbalanced state that the global economy has been in.
And is that what we're seeing now, or is that what we have? We've been seeing a lot of volatility.
I think we're seeing the start of it. Now, if policymakers in the US and in the UK and in other places decide to do another round of asset purchases, in my view, that will probably just delay the inevitable again, so the volatility might go away for some time. But ultimately, if we want to get to a sustainable model of economic growth globally, we have to deal with the unwinding of global imbalances. And that is unlikely to be not messy. It's going to be a messy process, most likely.
And what's happening with the euro right now? Because it is managing to hold up, and we've had comments from German Chancellor Angela Merkel renewing her commitment to the single currency, saying that, it's not a euro problem, it's a debt problem, but surely the two things are linked?
What I think is happening with the euro is that I doubt very much that longer-term, very sophisticated investors are buying euros because they believe that the sovereign debt crisis in the eurozone is going to calm down anytime soon. What I think it's more a question of is people betting on or playing that yield differentials trade, which has been a very profitable trade since the start of the year, and obviously because of the actions that the ECB have taken so far, it's supportive for the euro. So in advance of the press conference from Trichet next week, people are playing the euro very defensively. Obviously, they don't want to be overly short the euro in case there's more hawkish rhetoric from Trichet.
And difficult not to mention what's happening, developments in Washington right now, failure to reach an agreement to reach the debt ceiling. Could there come a point, could there be some sort of catalyst that will spike concern in the markets about the U.S. fiscal situation?
I think there already is concern in the markets about the U.S. fiscal situation, but I think probably the best thing I could point out to you is that the U.S. fiscal crisis is going to be a very long and drawn-out affair. There are going to be times when it looks okay. There are going to be times when it looks pretty poor. And this is something that's going to take many, many years to completely unwind and have to be dealt with by policymakers in the United States.
Great. Thanks so much. Stephen Gallo, Schneider Foreign Exchange. Thanks very much.
Thank you.